Hi friends, I'm back with one more video. Today's topic would be on debit spread. So as I've promised, right? So today I'll be like discussing about the entire debit spread logic. Okay, the points which we are going to cover today would be like when exactly we need to deploy the debit spread, how to calculate the maximum profit and loss for the debit spread, what are the selection criteria for the strike rates or the premiums, and what is the risk to reward we ideally get into the debit spread, what all different instruments, right, we can deploy the debit spread, and the potential adjustments. All right, so let me take you to the next slide. So friends, do not, I mean, I think the entire slide looks cluttered, but I've ensured that just to put all the main bullet points into one single slide. All right, so rather than me taking you through this entire slide theoretically. So I'll just try to do one thing. Whenever we're discussing about any bullet point, I'll in parallel I'll try to show you everything in the sensible or abstract. All right. So when we say debit spread, all right. So debit spread is basically a combo of one buy and one sell. All right. So let me take you to sensible. Okay. So I'll be showing you today with the bank nifty. Right. So when I say debit spread is combination of one buy and one sell. So let me take you to the sensible. Okay, this is a bank nifty which stands 37,148. All right. So basically, what I do is like whenever see, I'll tell you about the entire logic, but let me just deploy a plain debit spread. So whenever I deploy a debit spread from the ATM, I ensure that I usually take the premium of 225, or from the ATM I take like 2 to 3 strikes OTM, near OTM, and then deploy. So let's say I'm just buying this flag 225. So I think right, whenever we go for buy, right, the maximum profit would be unlimited, but at the same end we have the maximum loss of 5,633. All right, and the break even is like almost 1.82%. So if you go with only with the buying option, so you end up losing 5,633 with a potential of unlimited. But friends, we know, right, in the option buying this is very rare when you get the unlimited, until and unless you're able to find the momentum in the index or in the instruments. So this is the drawback of the only buy, wherein you'll have like good amount of loss. All right, so let's say if I want to go for only for selling position, I'll edit this. Right, so usually what I do is like, as I said, debit spread is a combination of one buy and one sell. Like, so let's say I'm selling 38,100. Right, so this is my debit spread. Right, this is my debit spread because, as I said, it's a combination of one buy and one sell. So let's say I'm just going with the naked sell. All right, so when I go with the naked sell, we have very less max profit potential, right, compared to the buying, but we have unlimited loss. All right, so let me show you only the buy position. Buy position has unlimited profit, and even the loss is almost like 5,633. If I just go with the selling position, my profit will be very less, but with a chance of unlimited loss. Just to ensure that we have a decent profit, and also we can just reduce the loss, so we basically go with the debit spread. So this is the debit spread, right? The moment I buy one C and sold one C. So this is how the payoff looks. So I've reduced my loss from almost like 6,000 to 3,433, and even my profit has increased from 2,000 to 9,000. So basically, this is a risk defined strategy. All right. So let me go back to. So when I say, see, debit spread can be deployed. We can just buy one ITM and then sell the ATM, or else we can just go for buy one ATM, we can sell the OTM, or the third combination would be buy one OTM and sell the OTM. So these are the various permutations and combinations. So basically, this will ensure you to know like what is the risk and reward. So let me take you to this first example of what will happen if I buy one ITM and sell the ATM. So I'll just clear the trade here. All right, I'll go here. So my bank nifty stands at 33,7,148. All right. So what I'll do, I'll buy a in the money. Okay, so let's say I'm just selling the ATM. All right, just look the risk to reward. It's almost like 1:1, right, with a probability of 50%. But in case if something goes wrong, we end up losing 1,003. That is like almost like 50% of our loss. All right, so I'll go with this thing with ATM to OTM. I'll clear the trade. Okay, so I'll try to buy one at the money. Okay, and then I'll try to sell one OTM. See, when we do this, this is almost 1:1, right? We have the potential of losing the 50% over here. So let me cover what will happen if I go like OTM to OTM. Let me clear this trade. Okay, so let's say this is my OTM. Okay, I'm buying one OTM and I'm selling one OTM. So ideally, even this is something like 1:1, but more than 1:1 risk to reward. But ideally, what I do is, friends, the best way to go for debit spread would be like look out for 1:2. See, when I say premium, right? So this one minimum we should have 1:2, or always better to have more than 1:2. If you can just get a risk reward of 1:3, I think that would be a very good trade. Right? Risk to reward of 1:3 would be like, even if you go for 10 different trades, if you end up losing seven trades, but still you'll be able to like make money by just winning like three trades out of the 10. So what I basically do is, so let's say this is my bank nifty. Okay, price stands somewhere like at 37,148. Okay, so what I'll try to do is like every time I go like 300 strike or 400 strike OTM, right? Basically, I go for like 225. Any premium which is like between like 220 to 250, I'll just try to buy this. And the next thing would be like I'll try to give like 500 gap, strike gap, and I'll sell this thing. Usually the logic is, if you look at this logic, right, the premium logic or strike selection, the sell leg premium should be half of the buy leg, all right, to get the best risk to reward. But the premiums all depends on the VIX, right? So just try to do some sort of trial and error in the ops or sensible before deploying. So premiums are based on VIX. So times you'll get like bigger premiums, at times you'll get like low premiums. So we do not have any straight formula. So end of the day, you have to just play around with the sensible or any of the platform what you're using. So let's say I'm just selling 38,100, right? If you look at my risk to reward, this is perfect, friends. 1:3. All right, and this is my break even, 1.58. So if you look at the payoff graph, right, mark this vertical red line is where the market stands as on date, right? So this is my break even. So let me capture this screenshot. Okay, okay, see, this is where the market stands. Okay, this is my break even. All right, this is my break even. So this is my bought leg and this is my sold leg. All right, friends, let me go back to this thing. So debit spread is basically a Vega neutral, or I would say like Vega positive trade, meaning, let's say I'm just trying to increase the price manually. Okay, let's say market has moved almost like 1% on any given day. You see the profit of 981 over here. All right, so let's now try to manipulate with the VIX. Right, so there is a good feature in sensible, so wherein you can just increase the VIX overall, both your buy leg and the sold leg. So what I'm just trying to increase the VIX and keep an eye on this 981 profit, friends. So let's see what will happen if the VIX increase. I'm just trying to increase the VIX here. The price remains as it is, right? Just keep an eye on the profit. Okay, I'm just trying to increase VIX, right? So profit has increased. right? 2% of VIX increase, profit started increasing, right? Profit started increasing. So now what I'll try to do is like, this is my bot leg, right? 37,600 is my bot leg, right? So right, increasing VIX, right, is good for the option buyer. So I'm just trying to increase the VIX for my bot leg and just keep an eye on this profit. When I'm just trying to increase only the bot leg with 1%, see the profit. Proportionate to that, the profits will keep increasing. All right, if you look at here, and let's see what happens if I increase the VIX for my sold legs. Right? Whenever, if you have any sold legs and the VIX is increasing, obviously that will increase the premiums. So we end up into loss. So let's say I'll just increase the VIX for my sold legs and keep an eye on this profit. See, from 2,600 it came down to 231, right? It's the other way actually. The profit will start melting with the increasing VIX on the sell side. All right, so VIX will definitely play a major role in debit spread, but just because we have like buy and sell legs, right? The cumulative increase in both your buy leg and sell leg will not create that much of panic in your debit spread. All right, so let me go back to my slide. So we have discussed about the risk to reward. We have discussed about the Vega neutral. Basically, all the debit spreads are Vega neutral, Vega positive. The increasing VIX, rising VIX is always good for debit spread. We have seen the example also, but the rising VIX for your selling side would get you into panic. But this is debit spread, so we have like both the legs, so this should not be a concern. Okay, and what is the maximum profit for spread? All right. So if see maximum loss is simple, your debit paid versus your debit received. Let me go back to my calculator. Okay. So you have paid the debit of 225, 225.3. All right. And then you have received 88 rupees as a premium for your sold legs. All right. 88. So this is like almost 137. So one single bank index is like 25 lot into 25, sorry, 137 into 25 is 3425. All right, so that's what 3425, almost like, because I've not considered the decimal, so it's like 34. So this is your maximum loss, right? How to come to this maximum profit? I mean, how should we calculate the maximum profit? It's basically simple formula, right? Maximum profit formula is spread, the entire spread minus the debit paid into number of lots. So to make it simple, if you look at the spread between 38,100 and 37,600, so you have almost 500 strike gap. All right, so 38,100 minus 37,600, 500. All right, I will go to here 500, my sorry, 500 minus your debit paid, that was like close to 137, into number of lots. We are trading with only one lot into 25, that would be like 9075. It's almost matching your maximum profit. So friends, this is the way we have to calculate the maximum profit and maximum loss. Spread minus debit paid into number of lots. Maximum loss would be like actual debit paid into number of lots. All right, friends, and let's say whenever you're going for debit spread, you should act as a option buyer. So this is basically like an option buyer. So market view is must. So we cannot deploy any trade without the market view, because this is a directional trade. Debit spreads are directional trades. This is not something like non-directional. Basically, this is a directional trade. So market view is must. So you have to always keep an eye on the support and resistance level. So let me take you back to trading view. All right, so let's say this is your index. Okay, bank nifty index. All right, let me take you to spot. So friends, I'll just leave it to you, right? uh, on the market view. So few follow some indicators, few follow some price action. So let's not discuss about the price action or any strategy, but you should have a view. Right. So what I meant to say is like, we see the potential area where we can deploy the debit spread would be like, see, I would be deploying my, so let's say this is my Thursday, I would be deploying my debit spread somewhere here. Reason being, the price is at the critical support level and it is want to go up, right? So this is just a probability. I can deploy debit spread here. All right, I can deploy one debit spread here because market is going up. When I say debit spread, I'm just referring to the call debit spread, right? Bullish debit spread. All right, I can deploy a debit spread somewhere here, okay, based on my price action. All right, I can deploy a debit spread somewhere here because market is going up. So we need to have the view because debit spreads are directional. So if you're not able to plot the support and resistance, and if you're not able to take a view of the market, so I think you would not get into profit, or I think you'll mess up all your trades. So direction of the market is must, right? So just to say, I cannot deploy a debit call debit spread bull debit spread here because I know there is a critical resistance. Until unless this resistance is broken, I'll not go for call debit spread. But ideally, I can go for put debit spread, right? Put debit spread is something like bearish. I can go for one put debit spread over here. All right, I can go for one put debit spread somewhere here. So friends, this is easy to say looking at the chart, but I'm just leaving it to you the way you wanted to take the view of the market. I'm just giving an example, right? So maybe I might have gone for call debit spread here looking at this breakout, but it was a false breakout, right? So maybe the price has broken the resistance, it went up. So maybe I might have deployed a debit spread, call debit spread here, but market is supreme. Market has came down, so I'll accept this loss. This was one of the loss making trade. Maybe here I would not have taken the debit spread until the market would have broken this high because I would have taken. So even if someone goes for the debit spread, the moment they saw the resistance got broken, so it could be a false breakout. So we will end up into loss making trade. So just I wanted to give you an insight on this thing. So you need to have the market view for going for the debit spreads. All right, so that's what I was trying to cover here. What is the best time to deploy? So friends, the best time to deploy would be like on the expiry day, almost at the end of the day between like 3 and 3:30 p.m., right? If you want to go for the positional trade, or the best thing would be go for, because expiry, right, the market is very volatile during the expiry day. You can just go on Friday, but if you go on the Thursday, you'll get good premiums. You'll get more strike gaps between the buy and the sell leg, or else you can go for Friday morning, right? Or any overnight trades. And also, this is like very helpful in the intraday too. You can just take the debit spread at 9 or 9:30, and then you can just keep monitoring. But market view is very important for debit spread, folks. Honestly, I'm telling, because this being a directional trade, right? You need to have the market view. All right. So weekly works well based on my experience. Weekly works well in the debit spread. Even you can go for monthly, but monthly is a huge time frame, right? So anything can happen. So the best thing would be like go for debit spreads in the weekly. The best instruments for debit spreads would be Bank Nifty ideally, because bank. If you look at the Bank Nifty, right, we have seen here, uh, right, Bank Nifty will have, sorry, right. See, if you go for Bank Nifty, right, Bank Nifty will have the strike gaps. See, whenever I'm deploying the debit spread, I have almost like 500 strike gap. You will come to know why we need to have like more strike gaps in the upcoming sessions. All right. Nifty, I think ideally you can go for Nifty for debit spread. So I think, but Bank Nifty would be like ideal instrument for the debit spreads. But even you can go for Nifty. But right, in the Nifty we have like very less low strike rates, like every 50. You can go for FNO stock options. When I say FNO stock options, it could be Reliance, SBI, but ensure that you're going for the liquid stocks, right? Just to ensure that the physical settlement will not happen. Ensure you're going for the liquid, or you can just go for top 10, top 20 Nifty stocks. And USD INR, even this is a very good instrument for the debit spreads. All right, friends. So let me come back to the sensible. All right, so this is the payoff graph of the debit spreads. So do not get confused with the payoff graph. So I'll just try to show you how the payoff graph looks in the chart. Okay, let me go back to, so I'll take one this thing. right? So friends, if you look at this payoff graph, right, this is showing something horizontal, so do not get confused. So I'll try to replicate the same thing on the chart. Okay, let me go to, this is my trading view. All right, so let's say your price is here, right? The current price stands here. All right, and now let's say you're planning to go for a debit spread. Okay, so what will we do? So we plan to purchase like maybe 2 to 3 strikes OTM here. This is your bot leg, and let's say you're planning to sell your leg here at this resistance. I'm just taking a sample, friend, just to show you how the payoff looks. I'm just taking a hypothetical example. All right, I'll enlarge this. So let's say, right, so this is your buy position. So this is how the payoff looks. This is your buy position, right, and this is your sell position, right, this is your payoff. So friends, look, don't you think we have made the, let's say this is how the payoff looks in the sensible. All right, got it. So let's say your price is somewhere here, your price stands here, right? So you will buy, usually what we do, we go like 300 to 400 OTM, you will buy, this is your buy leg, right? You will have a 500 spread, so this is your sold position. All right, so let's say market, from here the market comes to your break even, right? You'll start seeing the profit, but you'll not see the maximum profit, because your maximum profit starts from your sold legs. Whenever your sold legs comes to becomes ATM, so then you'll end up seeing the maximum profit. But the potential profit would be from your buy position till your sold position. So maybe the market expires here, you will get maybe 25% of the profit, 25% of the maximum profit. Let's say your market ends or expires at this position 38,800, so you'll get 50% of your profit. Let's say your market expires somewhere here, you'll get 75% of the profit. Let's say your market ends exactly at the sold position or maybe above your sold position, so you'll get your entire maximum profit. So friends, what I've done is like I've just tried to show you the graphical representation of the payoff graph in the sensible, which is like horizontal inline to your actual chart, right? Basically, when we go for the debit spread, the call debit spread, we wanted the price to go up, so this is what I'm trying to replicate, right? If you're getting confused with this payoff graph, I've just plotted this payoff graph inline to your market, inline to the chart. All right, friends, so I think we have discussed, so I want to make very short, so I've just covered everything, so we'll just revisit or recap. We'll do one recap. Basically, debit spread is combination of one buy and one sell, right? This can be deployed between like ITM to ATM or ATM to OTM or OTM to OTM. This is purely based on your risk appetite. If you want good risk to reward, you have to go for OTM to OTM. If you want to have like 1:1, you can just go for ATM to OTM. So it all depends on your risk appetite. Premium logic we have already discussed. So any buy position, the sell leg premium should be almost half of the buy leg. Let's say if your buy leg premium is 200, so ensure that you're taking the sell leg at 100, or else maintain the gap of 500 points for the bank nifty, and for nifty you can just maintain like 100 points. All right. Premiums are basically based on the VIX, right? If the VIX is high, you'll end up getting more premiums. So before deploying this trade, ensure that you're just experimenting or doing some sort of analysis on your obstro and sensible, and then go for the deployment based on your risk appetite. Debit spread is always risk defined strategy, meaning even if you have like lower circuit or higher circuit, upper circuit, your loss and your profit would be risk defined actually. So you will not have more than the loss which is like projecting here, and even your profit will be like locked. So this is the beauty of debit spreads, friends, because your loss and the profit will be like capped, right? And minimum, always have minimum 1:2. So in case if you're not getting any trade on Thursday, wherein your risk to reward is 1:1, just avoid to do debit spreads during that particular week. Okay, always good to have 1 is to 2 and more than 1 is to 2. Ideally, I go for 1 is to 3. Okay, then debit spreads are vega neutral. We have shown, right? Vegan. So you have to always act as a option buyer. Whenever you see the profit, you have to just book. So that will cover as part of the upcoming adjustment sessions. Rising VIX is always good for debit spread. All right, max profit we have seen spread minus debit paid into number of lots. Your maximum loss would be the actual debit paid. All right, so whenever you pay like 200 for your buy leg and you're selling for 100 premium, so 200 minus 100, that would be your maximum loss. Market views must, as this is a directional trade, so this I'll just leave it to you. Whatever analysis you, whether you go for the price action or you go for some open interest or you go for some indicators. Best time to deploy, even this I'll leave it to you. The best time would be like Thursday end of the day or Friday morning, or even you can do this on the intraday with the market view. Weekly works well rather than going for the monthly. Instruments, as we discussed, right? Bank Nifty is the ideal candidate, and then you can go for Nifty. Even it works for FNO stocks and liquid stocks. So, friends, I'll take you to the next slide. Okay, so this would be my first video, and then these are all the adjustments. So, I mean, see, whenever we're deploying a debit spread, right? You saw 1 is to 3. So, what adjustments we are supposed to do when the market goes against our view, right? So we need to have some strategies. And what if the market went up and we already see like 3 to 4% of profit, how to lock the profit? So basically the adjustments are went for, right, how to lock your profit or how to reduce the max loss. All right, and these are various adjustments. So I'll try to create one each session or one each YouTube video for all these adjustments, wherein I'll be sharing my real trades, and if required, I'll do one simulations in Obstra by taking up any good example. Basically, the adjustments what we do is, right, rolling up or rolling down the buy leg in case the market goes in our favor. Already, if the market goes against our view, so we have one strategy called strangle, converting it to strangle. I'll explain you in the upcoming sessions. The other, if the market goes against our view, so we can exit the buy position and let the sell position be open. This is one of the other adjustments. We can convert the entire debit spread into butterfly. We can convert the debit spread into ratio ladder just to increase the profit or to lock the profit, or else we can just convert it to ratio spread. All right, and considering the debit spread, where the debit spread stands, we can just do some naked selling, and we can also deploy some contra trades. So friends, keep watching for all the videos on this adjustment. So I think we'll have another like 8 another sessions. So I'll try to make it very short. So this session might have been lengthy because I wanted to discuss about the entire debit spread. But this, I'll ensure that I'll take a real-time example. If I come across any such adjustments during my real trade, I'll be sharing with you. And you can always go back to my YouTube channel. There is one particular playlist wherein I've started sharing all my real trades. So you might find this butterfly, ratio ladder, ratio spread, all these 3 to 4 adjustments already in my real trades. If you are interested, you can just go back to my YouTube channel to the playlist with the name real trades on the debit spread adjustments, and you can start watching. But still, I'll ensure that I'll come up with some videos on all these sessions. Thank you, friends. But friends, this is the first time I'm requesting you guys to please subscribe my channel because I need some sort of motivation. It really takes time in terms of creating the videos. All right, so please subscribe my channel, and if required, just try to share the YouTube channel with your friends. All right, thank you, friends.